Welcome to the Explainer. Okay, let's talk about that moment. You know the one. Your portfolio is bleeding red, every news channel is screaming sell, and every single fiber of your being is telling you to just hit that panic button. Well, today, we're going to learn how to fight that instinct and how to win.
I mean, it's just 4 words, right? Buy low, sell high. It should be the easiest thing in the world, and yet our brains seem totally hardwired to do the complete opposite. We get excited when prices are soaring, and we freak out when they're in the gutter. So, what's going on here? The problem, it turns out, isn't the market. It's the wiring inside our own skulls.
I want you to think of it like this. There's a war going on inside your head. On one side, you've got your analytical brain. It sees a great company drop 30% and calmly says, "Hey, look, it's on sale." But on the other side is your emotional brain, the one that's hardwired for pure survival. It sees that same drop and thinks it's a predator, and it just screams, "Run." And because we feel the pain of a loss about twice as much as the pleasure of a gain, guess which brain usually grabs the steering wheel in a downturn? Yeah, not the logical one.
But here's the good news. Don't worry, because the greatest investors in history, they've been fighting this exact same battle for over a century. And lucky for us, they left behind the cheat codes to win it. Okay, let's dive into some of this wisdom.
Benjamin Graham, the father of value investing, he absolutely nailed it. The real battle isn't against the market, the charts, or the tickers. No, the battle is with the person you see in the mirror every morning. It's your own impatience, your own fear. That's the real enemy.
Now listen to this one closely. Buffett isn't just giving you a nice little saying here. He's giving you a direct command to do something that feels physically uncomfortable. Being greedy when everyone else is absolutely terrified should make your stomach churn. If what you're doing feels easy, you're probably just running with the herd off a cliff.
And boom, Peter Lynch just brilliantly illustrates that point. You can have all the right analysis, right? Every spreadsheet can be perfected, all your numbers can add up, but all of that is completely and utterly useless if you don't have the emotional fortitude, the stomach, to stick with your plan when the market punches you in the gut.
So, Sir John Templeton, he made his entire fortune on this one simple idea. The moment when things look the absolute bleakest, that is the point of maximum opportunity. And listen, that isn't just some nice theory, it's a treasure map. And right now, there is a giant axe marking the spot in a very specific corner of the market.
So let's put this wisdom to the test. We're going to apply it to a real-world scenario that's happening as we speak. There's this massive fear that a dominant cybersecurity company like CrowdStrike could be made obsolete practically overnight because of AI. This, my friends, is a classic maximum pessimism scenario.
And right here you can see that internal war playing out. The emotional brain, that panicked herd, it sees this AI threat. It sees a falling stock price, and it just screams, "Sell, get out now." But the analytical, disciplined investor, they're asking completely different questions. They see a market that's reacting to a scary story, not to the hard data. And that's exactly when those words from Sir John Templeton should be echoing in your head. The time of maximum pessimism is the best time to buy.
And hey, this isn't just a CrowdStrike story. The entire high-quality software sector is being repriced based on fear. Just look at ServiceNow. Its valuation has been chopped in half from its 3-year average. And this is while the business is still growing at an elite pace. The market is fundamentally mispricing quality right now.
And this, right here, is how wealth gets transferred from the impatient to the patient. You have retail investors driven by loss aversion. That little psychological quirk, where losing $1 hurts twice as much as gaining $1 feels good, and they're selling based on emotion. Meanwhile, the institutions, they are cold, hard machines. They have automated orders set at key price levels, and they are systematically buying up these quality assets from all the people who are panicking.
So what's the secret to breaking this cycle? Well, it isn't more willpower. It's not about gritting your teeth and trying harder to be brave. No, it's about building a better system, a system that removes your emotional, self-sabotaging brain from the equation entirely.
And this brings us to the ultimate goal, becoming a stoic investor. Now, this isn't about suppressing your emotions or becoming a robot. It's about building a system so robust, so disciplined, that your fear and your greed become totally irrelevant to your long-term success.
So what does that system look like? Well, the simplest and most powerful one is dollar cost averaging. Think of this as your ultimate defense against recency bias, our brain's dumb tendency to think that whatever's happening right now is going to happen forever.
By automatically investing a fixed amount of money on a fixed schedule, you short-circuit that bias. You mechanically buy more shares when prices are low and fewer shares when they're high. Your system forces you to be greedy when others are fearful.
Okay, so now you have the mindset of the legends and an automated tool to protect you from yourself. So here it is, the final test to make sure you're truly ready.
Peter Lynch gives us the ultimate filter here. He's demanding that you separate the signal from the noise. So what's the noise? The noise is the chaotic stock chart, the scary headlines, the daily drama. And the signal, the one thing that actually matters in the long run? It's the business itself. Is it still growing? Is it still profitable? If the answer is yes, then the business is fine, even if the stock price is temporarily sick.
So this is it. This is the ultimate challenge. Can you pass the newspaper test? If all the news headlines and all the stock prices just disappeared for a month, would you still be confident in the businesses you own? Ask yourself that. Do you believe in the company, or are you just staring at the stock ticker? If your conviction is really based on the business, then a price drop is exactly what it should be, an opportunity. If not, well then you were never really investing in the first place. The choice is yours.